When we talk about digital money, two popular terms come up a lot: cryptocurrencies and stablecoins. But what exactly is the difference between them? Let's break it down simply. Cryptocurrencies, like Bitcoin and Ethereum, are digital currencies that are not controlled by any government or bank. They work on a technology called blockchain, which makes transactions secure and transparent. But the price of cryptocurrencies can change very fast. One day they might be worth a lot, and the next day much less. This makes them risky for people who want steady value. On the other hand, stablecoins are a special type of cryptocurrency designed to keep their value steady. How? They are usually linked or pegged to a real-world asset like the US dollar. This means for every stablecoin, there is an equivalent amount of dollars or assets held in reserve. Because of this backing, stablecoins don't go up and down like regular cryptocurrencies. So, in simple terms, cryptocurrencies are like wild horses, full of energy but unpredictable. Stablecoins are more like a calm horse, steady and reliable. Knowing this difference is the first step to deciding which one fits your needs better, which holds its value better. When it comes to stability, stablecoins clearly have the upper hand. Unlike regular cryptocurrencies, which can experience huge price swings every day, stablecoins are built to keep their value steady. This is because stablecoins are backed by real assets, usually the US dollar or other trusted currencies. For example, one popular stablecoin like USDT or USDC is always supposed to be worth about $1. This happens because these stablecoins keep reserves of actual dollars or assets equal to the amount of coins in circulation. So if you have 100 stablecoins, there should be $100 kept safely somewhere to back them up. Cryptocurrencies, on the other hand, don't have this kind of backing. Their price is determined by market demand and supply, which means they can rise quickly, but also crash just as fast. This makes them less reliable if you want to keep your money's value safe. But remember, while stablecoins are more stable, they do come with risks like the trustworthiness of the company managing the reserves. So, if you want less risk of losing value quickly, stablecoins are better. But if you want to aim for big gains with more risk, cryptocurrencies might be your choice. Where should you use each? Cryptocurrencies and stablecoins have different uses depending on what you want to do with your money. Knowing when to use each can help you make smarter decisions. Cryptocurrencies like Bitcoin and Ethereum are often used for investment and trading. People buy them hoping the price will go up so they can sell later and make a profit. Some also use cryptocurrencies to send money quickly across countries without banks or fees. Plus, certain businesses and online platforms accept cryptocurrencies as payment. Stablecoins, however, are designed mainly for stability and convenience. Because their value stays close to the US dollar, people use them for everyday transactions and savings. For example, if you want to keep your money safe from the ups and downs of crypto markets, but still want to use digital currency, stablecoins are a good choice. They are also popular for moving money within cryptocurrency exchanges quickly without converting back to cash. In summary, if you want to invest or pay with a chance of high rewards, cryptocurrencies are useful. But if you want a steady digital dollar for payments, savings, or easy transfers, stablecoins work better. Volatility vs. trust issues. Both cryptocurrencies and stablecoins come with risks, but they are different. It's important to understand these risks before you decide what to buy. Cryptocurrencies are very volatile, meaning their prices can change a lot in a short time. This can lead to big profits, but also big losses. For example, Bitcoin's price has gone up and down by thousands of dollars in a few days. This volatility makes crypto risky if you want to keep your money safe or use it for daily spending. Stablecoins try to avoid this risk by keeping their value stable. However, their biggest risk is trust. Since stablecoins rely on companies or organizations to hold real money or assets as backing, you have to trust that these companies are honest and actually have enough reserves. Sometimes these companies don't fully disclose their reserves or face legal issues, which can cause the stablecoin's value to fall. In short, cryptocurrencies risk losing value because of price swings, while stablecoins risk losing value if their backing isn't solid or trustworthy. Always do your research and only invest what you can afford to lose. How are they governed? Regulation plays a big role in the future of both cryptocurrencies and stablecoins. Governments around the world are trying to figure out how to control these digital assets to protect people and prevent illegal activities. Cryptocurrencies are still mostly unregulated in many countries, which means anyone can buy or sell them freely. But this lack of rules also causes problems like scams, fraud, and money laundering. Some governments have banned or limited crypto trading because of these risks. Others are working on clear laws to make crypto safer for users. Stablecoins face even more attention from regulators. Since stablecoins are tied to real money, governments worry about their impact on the financial system. They want to make sure stablecoins are backed properly and that companies managing them follow strict rules. Some countries have started requiring stablecoin issuers to get licenses and share information to build trust. In short, while cryptocurrencies are still in a gray area, stablecoins are facing stricter rules to ensure stability and safety. Understanding these regulations is key when deciding which digital asset to use or invest in. Who's using them? The adoption of cryptocurrencies and stablecoins is growing fast, but different groups use them in different ways. Cryptocurrencies like Bitcoin and Ethereum are popular among investors and tech enthusiasts. Many people buy them hoping to make profits as prices rise. Some businesses accept cryptocurrencies as payment, but this is still limited. Crypto is also used in some countries with unstable currencies as an alternative way to store value. Stablecoins, however, are seeing rapid adoption by businesses and institutions. Companies like PayPal, Amazon, and some banks are starting to use stablecoins because they offer fast, low-cost transactions with stable value. This makes them useful for payments, remittances, and trading within crypto exchanges without converting back to traditional money. In short, cryptocurrencies are mostly used for investment and some payments, while stablecoins are becoming popular for everyday business transactions and transferring money quickly. The growing use of stablecoins by big companies shows their importance in the future of digital finance. Which should you buy? Deciding whether to invest in cryptocurrencies or stablecoins depends on your goals and risk tolerance. If you want to grow your money and are ready to accept big ups and downs, cryptocurrencies might be right for you. Coins like Bitcoin and Ethereum can bring high rewards if their price goes up, but they can also lose value fast. Investing in crypto is like riding a roller coaster, exciting but risky. You should only invest what you can afford to lose. Stablecoins, on the other hand, are not designed to increase in value. Their main purpose is to keep your money stable and safe from market swings. They are good if you want to avoid risk or need a digital way to store or transfer money quickly. However, because stablecoins are tied to real money like the US dollar, they won't make you rich from price gains. In summary, if you want potential big profits and can handle risk, choose cryptocurrencies. If you want safety and stability, stablecoins are better. Always research carefully and pick what fits your financial goals. If you found this helpful, don't forget to hit that subscribe button for more smart investing tips. Which do you think is better? High risk crypto or safe stablecoins? Share your thoughts in the comments below. Stay tuned and don't miss our next video. 5-minute AI financial checkup. Improve your budget fast. See you there.